A new banking-related development could affect how your Social Security benefits are processed. If you receive Social Security, SSI, or SSDI, it's important to understand what's changing and how it may impact you. Some updates in banking procedures are being introduced across the United States, and many people are not yet fully aware of how these changes might influence the timing or availability of their deposits. For millions of individuals, these monthly payments are essential for covering everyday expenses, such as groceries, medications, rent, utilities, and transportation. Because of that, even a short delay or temporary restriction can create real stress. This is not about creating fear or spreading rumors. It's about making sure you understand how banking systems are evolving and what that means in practical, day-to-day terms. In this video, I'll walk you through everything in clear, simple English. No complicated financial language, no unnecessary technical explanations, just straightforward, useful information to help you stay informed, prepared, and confident about your situation. Let's begin with the background. For decades, the U.S. banking system has operated under a framework designed to protect account holders, particularly those who rely on fixed incomes such as Social Security, SSI, and SSDI. These protections didn't appear overnight. They developed over time, often as a response to financial crises, fraud cases, and situations where people temporarily lost access to their funds through no fault of their own. Because of these safeguards, most people receiving federal benefits have experienced a predictable system. Deposits arrive on a regular schedule, funds are available quickly, and there are usually no complications. That consistency has created a sense of reliability that many people depend on. However, in recent years, there has been a growing focus on preventing fraud, especially involving government benefit payments. Cases of identity theft, unauthorized account access, and fraudulent claims have led regulators and financial institutions to take a closer look at how money moves through the system. Agencies such as the Federal Deposit Insurance Corporation, FDIC, the Consumer Financial Protection Bureau, CFPB, and the Office of the Comptroller of the Currency, OCC, regularly evaluate banking practices. As part of that process, they encourage banks to strengthen identity verification systems and improve how they monitor account activity. This has led to updates in how banks manage risk, verify customers, and respond to anything that appears unusual. So what does this mean in everyday terms? Banks are placing greater emphasis on confirming that account activity is legitimate and that customer information is accurate and up to date. If something in an account stands out, such as a change in behavior, missing information, or a system-generated alert, the bank may review the account more closely. During that review, access to funds could be temporarily limited while the bank verifies the details. This is not a permanent action and does not mean that your benefits are lost. In most cases, it simply means the bank needs to confirm that everything is secure before allowing normal access to continue. For many people, this process happens quickly and without disruption. But for others, especially those who may not regularly check messages from their bank or who prefer in-person banking, it can lead to unexpected delays. To better understand how this might look, let's walk through a realistic example. Imagine a retiree who has had the same checking account for many years. Their Social Security deposit arrives on the same day each month, and they've built their routine around that schedule. One day, the bank sends a notification asking them to confirm their contact details or provide updated identification as part of a routine compliance check. If that message is overlooked, perhaps because it was sent by email or arrived as a letter that didn't seem urgent, the account might eventually be flagged for review. When the next deposit arrives, access to those funds could be temporarily restricted until the requested verification is completed. Once the customer provides the necessary information, the issue is usually resolved. However, even a short delay can be inconvenient, especially when bills and essential expenses are involved. Now let's talk about legal protections, because this is an area where many people have questions. Federal law does provide important protections for Social Security and other federal benefit payments, particularly in situations involving debt collection or garnishment. In those cases, banks are required to protect certain funds so that individuals are not left without essential income. However, it's important to understand that these protections apply specifically to debt-related actions. They do not prevent a bank from reviewing or temporarily restricting an account for security, compliance, or identity verification purposes. These are considered separate processes under banking regulations. Understanding this distinction can help avoid confusion and ensure that you know what to expect in different situations. Now let's take a closer look at SSI and SSDI recipients. SSI, or Supplemental Security Income, is designed for individuals with very limited income and resources. Because of this, even a brief delay in accessing funds can be especially difficult. Many SSI recipients rely on their payments for basic daily needs, and there may be little room for flexibility. SSDI, or Social Security Disability Insurance, supports individuals who are unable to work due to qualifying disabilities. Some recipients may face additional challenges when it comes to responding to bank requests, particularly if they are managing health conditions, mobility limitations, or other barriers. These realities highlight the importance of being prepared and taking simple steps to reduce the likelihood of disruptions. So, what can you do right now to protect yourself? The first step is to make sure your contact information is current and accurate. This includes your phone number, mailing address, and email address if you use one. Banks rely on this information to send important notices, and outdated details can lead to missed communication. The second step is to understand your bank's policies. Contact your bank and ask how they handle direct deposits, what might trigger a review, and what the process looks like if a review occurs. Having this information ahead of time can make a significant difference. The third step is to stay engaged with your account. This doesn't mean constantly checking your balance, but it does mean paying attention to any messages from your bank, whether they come by mail, phone, or online. The fourth step is to keep important documents accessible. Having identification and proof of address readily available can help speed up the process if verification is ever required. The fifth step is to consider having a small financial cushion if possible. Even a modest amount set aside separately can provide some flexibility in case of temporary delays. Another helpful step is to maintain a consistent banking pattern. While life changes can sometimes affect how you use your account, keeping your activity relatively stable can reduce the likelihood of triggering automated reviews. It's also a good idea to build a relationship with your bank. Visiting your local branch occasionally or speaking with a representative can make it easier to resolve issues if they arise. Familiarity can sometimes lead to quicker assistance and clearer communication. If you have a trusted family member or friend, you might consider allowing them to be an authorized contact on your account. This doesn't mean giving up control. It simply allows the bank to communicate with someone you trust if needed. Some individuals also explore the option of switching banks or opening an additional account. This can provide flexibility, but it's important to handle any changes carefully. If you decide to switch, make sure your direct deposit is properly updated and confirmed before closing your old account. Credit unions are another option worth considering. They often focus on community-based service and may offer a more personalized experience. Like traditional banks, they are federally insured, providing protection for your deposits. Now, let's expand further on how these changes can affect everyday financial planning, because understanding the broader picture can help you feel more in control. When banking systems become more focused on verification and monitoring, it doesn't just affect deposits. It can also influence how quickly transactions are processed, how alerts are triggered, and how customer service handles certain situations. For example, if you suddenly make a large withdrawal or transfer that doesn't match your usual pattern, it could trigger a review. This doesn't mean you've done anything wrong. It simply means the system is designed to notice changes and double-check them. This is why consistency and awareness are so important. The more your account activity follows a predictable pattern, the less likely it is to be flagged unnecessarily. And if you do need to make a change, such as transferring funds or updating account details, it can be helpful to inform your bank in advance when possible. Let's also talk about timing, because this is something many people rely on. Social Security payments typically follow a structured schedule based on factors like your birth date or the type of benefit you receive. While banks do not control when payments are issued, they do control how deposits are processed once they arrive. In most cases, deposits are made available quickly, but processing times can vary slightly depending on the institution and any internal reviews. Understanding this difference can help you plan more effectively. It's not just about when the payment is sent, it's also about how your bank handles it once it arrives. Another important point to consider is communication. Banks are increasingly using digital methods to contact customers, including email, text messages, and mobile app notifications. While these tools can be convenient, they are only effective if you actually see and respond to them. If you prefer traditional communication methods, such as phone calls or physical mail, it's worth discussing those preferences with your bank. Clear communication goes both ways. If you receive a message from your bank that you don't understand, don't ignore it. Reach out and ask for clarification. Taking a few minutes to address a question early can prevent a much larger issue later. Let's also revisit the idea of preparation, because this is one of the most practical ways to protect yourself. Preparation doesn't mean expecting problems. It simply means being ready to handle them if they occur. This includes knowing where your important documents are, understanding your bank's policies, and having a plan for accessing funds if there's ever a temporary delay. For example, some people choose to set up automatic payments for essential bills, while others prefer to pay manually after confirming their deposit has arrived. There's no single right approach. It depends on your comfort level and financial situation. The key is to choose a method that gives you confidence and control. In addition, it may be helpful to review your monthly expenses and identify which payments are most time-sensitive. Rent, utilities, and medications are often top priorities. By knowing exactly when these payments are due, you can better align them with your deposit schedule and reduce the risk of late payments if there is ever a short delay. Another useful habit is to keep a simple written record of your deposits and withdrawals. This doesn't have to be complicated. Even a small notebook where you track when your benefits arrive and when bills are paid can give you a clearer picture of your finances and help you notice any irregularities quickly. If you use online banking, take a few minutes to familiarize yourself with the features available. Many banks allow you to set up alerts for deposits, low balances, or unusual activity. These alerts can act as an early warning system and help you respond faster if something unexpected happens. Now let's add one more important layer to this discussion: how to respond calmly and effectively if a delay or hold actually happens. If you ever find that your deposit has arrived but you cannot access it, the first step is not to panic. In most cases, these situations are temporary and can be resolved with the right information. Start by contacting your bank directly and asking whether your account is under review and what specific steps are required to restore access. Take notes during the conversation. Ask for clear timelines and request a reference number if one is available. This helps you stay organized and ensures you have a record if you need to follow up. Next, confirm whether your payment was successfully sent by the Social Security Administration. This helps you understand whether the issue is on the bank's side or if there is a delay in processing the payment itself. If documents are required, try to provide them as quickly and accurately as possible. Delays often happen when paperwork is incomplete or unclear. If visiting a branch is difficult, ask if there are alternative ways to submit documents, such as secure online uploads or mail. It's also helpful to stay polite but persistent. Customer service representatives are there to help, and clear communication can often speed up the process. Before we conclude, let's once again address the topic of scams, because awareness here is essential. Scammers often take advantage of confusion or uncertainty, and financial topics are a common target. They may pretend to be from a bank or a government agency and create a sense of urgency to pressure you into sharing information. Always remember that legitimate organizations do not ask for sensitive information in unexpected ways. If something feels unusual, Take a step back and verify it through official channels. You can also protect yourself by keeping your personal information secure, avoiding sharing details unnecessarily, and discussing any concerns with someone you trust. It's also a good idea to regularly review your bank statements for any unfamiliar transactions. Even small, unauthorized charges can be a sign of a larger issue. Reporting them early can help prevent further problems and protect your account. Finally, let's talk briefly about confidence and mindset, because this matters more than most people realize. Financial systems can sometimes feel complicated or overwhelming, especially when rules and procedures change. But understanding even the basics gives you a strong advantage. The more familiar you are with how your account works, the less stressful these situations become. If something unexpected happens, remind yourself that most issues have solutions. Taking calm, steady steps, checking your information, contacting the right people, and following instructions can resolve the vast majority of problems. You don't need to handle everything at once. Just focus on one step at a time. To bring everything together, banking procedures are evolving, mainly to improve security and reduce fraud. While these updates are designed to protect customers, they may sometimes involve additional verification steps that can temporarily affect access to funds. By staying informed, keeping your information updated, maintaining awareness of your account, and preparing for different scenarios, you can reduce the likelihood of disruptions and handle them effectively if they occur. Most importantly, remember that you are not alone in this. There are systems, protections, and resources in place to support you. Taking a proactive approach can make a meaningful difference in your financial stability and peace of mind. Stay informed, stay prepared, and take care. Subscribe to Senior Wellness Hub for more clear, reliable, and helpful updates designed to support your financial well-being and help you navigate important changes with confidence.